The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more, do we go into the breach, dear friends? S&P cash is up about 6 points. Volume is, I'm going to call it tepid. 2.3 billion shares as we start the day. But of course, we were down to 2074. Volume was incredibly light this morning. In fact, I kind of check off different times of the day to see how volume's coming in. It's not like I always watch every 10 or 15 minutes, but I pretty much wait till about 10 o'clock before I make any trading decisions. And I started looking at the volume today, and being down, 20 points or so, we should have seen probably 850 million shares by 10, something like that. Should have been pretty strong volume. We had about 600 million shares. So volume was very light as we went down there and retested it. Of course, after a long weekend and yesterday, everybody saw the instant dump. After a quarter comes in, it's not uncommon to see that kind of volatility where everybody throws out some of the winners that they had over the last 3-6 months or a year to set up for the next quarter. But again, today is the last day of fund buying. It is the last 2 trading days of the month and first 3 trading days of the month. So we basically had the first one on Friday. The first day of trading. And then, of course, yesterday and today. So today is the official end of fund buying. If you go by the written letter of the law for charters for funds. I don't think there are a lot of people chasing people around if they don't buy everything by today. But generally what they will, money managers will do is if you don't do it and you get caught on the wrong side, they'll move their money to yet another fund. So there's a lot of reasons why fund managers do make sure that at least by today, they are 100% invested with all the cash available. And, we had about $38 billion come in last week to funds. And most of the time, what we're looking for is IRA money. Well, there was some IRA money, not much, but man, did we have a lot of cash leave Europe, flood in here to the United States, and find its way where it will be treated just a little bit better, they think. We're off a nickel on the dollar index today at 96.10. That's suddenly up there, and of course that sets up about 98 for resistance to the upside. There is a lot of men behind the curtain, if you get the 1940 movie reference. And that continues to be an issue for traders. But, could it get up to 98? I think it could. My guess is that there's a lot of active management by the U.S. Treasury to keep it somewhere between about 94 and 98. When things get rough, 96 is probably where they'll start making sure and trimming the sales a little. Did get up to 96.50 today, but there isn't a lot left for the Fed to do. They can buy back stocks. They can buy additional QE instruments. The Treasury can get involved to an extent, but certainly nothing like they did from 2011 to 2015. So we shall see. To me, the control rods in this nuclear reactor of a market is the dollar index now. It's kind of the last bastion, the last great hope of elitists in Washington, D.C. To control markets. Eventually, they'll break and the markets will realign correctly. What else can you say about it? Two wrongs don't make a right, but two rights made the first airplane. That's what you can say about it. As, of course, we always like to meet about this time.
The following takes place between 2 p.m. and 3 p.m.
And we got a great deal of things happening yet today. And I'm going to make a little history also tonight. We'll talk about that. A lot of great things going on. The only bad thing is it's summertime in Florida. It just rained, and the humidity is about 2,000%. The temperature, the surface of the sun. Other than that, I'm ready to get moving.
Then it's all just a little bit of history repeating.
It is history repeating. On this day in 1785, Congress declares the money unit of the United States will be the almighty dollar. Some people later call it the bank. Benjamins, big ones, bills, bones, booty, bread, bucks, cabbage, cheddar, cheese, chips, coin, clams, C-notes, dead presidents, dimes, dough, doubles, ducats, fins, 5 spots, fivers, folding stuff, greenbacks, G's, grands, large, lettuce, long green, loot, lucre, mola, nickels, ones, quarters, sawbucks, scratch, shekels, simoleons, singles, skrilla, smackers, snacks, sugar, tenors, 10 spots, 2 bits, wad, wampum, and yards. And what else can you say about it? It's everything that you wanted to have. The show dedicated to the almighty dollar. We move on. The data dump, of course, I was gone yesterday, but I've warned people to watch what happens over long 3-day weekends because, of course, the worst of the news comes out. The worst offender over this weekend was definitely Tesla. It wasn't just any Sunday. It was the middle of a 3-day break for U.S. markets. They buried it on Sunday. And they, once again, for the, 8th time in a row, missed deliveries, missed profit, missed vehicles, missed everything. But it does not matter. Tesla is one of these stocks. I will now say that Tesla is gone into the pantheon of cult stocks. Why is it? Come on. TSLA. It's up 18 cents. It got down to 209 today. 214.60 was the high so far. We've talked about this for a while. I've always thought it was a $40 stock that was priced at $220, $240, $260 over the last little bit. But there was a stock that acted very much like this. It was called iOmega. It started in 1996, pretty much when I started trading. I thought all stocks were like this. An endless supply of money just came out of the disk drive slot. We'll talk more about the parallels between iOmega and Tesla when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, we're talking about Tesla, and of course, even more bad news today out for Tesla. It's unaffected. At some point, a stock becomes a true cult stock. It can be Apple, although they had the sales to back it up. There's always the promise. The old saying is sell the sizzle, not the steak. And occasionally you get these stocks that have a very charismatic leader. Let's talk about Steve Jobs. But in this case, it's Mr. Musk. He makes very easy news, and reporters, for the most part, are incredibly lazy. We can see that. In the last 20 years, they've gone from bad to worse. Anything that's easy, anything that doesn't cost, all he has to do is say he's going to the moon next year, and everybody dutifully reports it, even though it's never going to happen. You know, you find more things that are more interesting than not in these kinds of issues. And of course, some discussion about whether or not Mr. Musk should have disclosed that his self-driving mode killed 4 people down here in Florida about mid-May. Especially since he had a secondary in which some shares that he was selling went out on the block. I'm going to give him a little bit of pass on this, because apparently anybody and their dog can't think that they're paying for the next 10 years of growth in the stock already today. There's nothing you're going to tell them. It's kind of like trying to talk somebody out that's an avid supporter of maybe a presidential candidate going into this November. I think you could tell them that they were killing small babies. It would not matter. Most of the people, about 80%, have made up their mind. There's the 20% out there where it's going to make a difference. What happens eventually in the iOmega's case, it got to, 350 PE going forward, and it was making money. But it did not matter. If you watched CNBC at the time, All you had to do was say anything that was even questioning it, and you got death threats if you were one of the commentators. If you were one of the analysts and said that things weren't going well, again, more death threats. There's nothing worse than trying to have a logical and measured trading policy in a world that's insane. And why not all stocks can be insane. There's always one or two or three or four that do not pass the smell test. Everybody knows it. And what you have to wait for is the big payoff, and that is that just like Enron or any of the rest of these, I'm not saying this is a fraud. I'm just saying that the people have priced this thing at something that is absolutely bat crap crazy for its current price. They make a good product, but it does not matter when it gets into stocks and cultism. You can't say anything that will ever change their mind. Eventually, everyone will be in it. The high will be made, and the reality will come into it over time. We've seen it to a small extent in Apple. Just remember that right now, figuring the next few years of growth, that Tesla would be worth about $40 on any kind of reasonable metric right now. In a couple of years, maybe it would be worth $60. Maybe it'd be worth $80 in 5 years. But of course, it's trading out at that. No matter how much they say today, it is just another excuse to buy it. The smartest minds on Wall Street are short this stock. They have a lot of patience. They aren't like us. We don't make money in 2 weeks. We've moved on. But this is one of these stocks to keep a very close eye on. The news starts to permeate and percolate, and eventually you find these stocks giving up the ghost and making a whole lot of money. But it takes a lot of patience to sit on these if you are short, and if you are an individual trader, what you really want to look at is wait for this stock to go up and no one short it. When the retail clients quit shorting this stock, it will fail. It is a triple X time, and I'm not talking about pornography. The SEC is proposing a limit to leverage factored ETFs, and saying that at most they think that they should be margined up at 150% or 1 times that of the net assets. They want to segregate the amounts of money underneath it. So if you are one of the companies that runs the ETF, you'll have to mark to market the coverage amount. You'll have to have segregated assets behind it. You can't use your big company. That is like Goldman Sachs saying, hey, we've got this big company. If we get into a loss on this particular ETF, we can back it with our company. That would not be available anymore. This may cut down a huge amount of the ability to buy 3X ETFs. And risk-based coverage amount, they're basically saying that you would have to go in and treat this like a hedge fund or a regular fund, not an ETF, and accept the risks in it. This has been kind of mulling about and percolating for a while. But guess what? Just before the elections, probably about September, we will have a result out of this. But right now, it looks like there's a lot of push forward to go ahead and get rid of 3X ETFs. So the old thing is, they used to say in the military, smoke them if you got them. I'm going to say probably use them while you can. We may be limited to 1.5 times the net asset movement by later this fall. So keep an eye on it. In the question, do you think the portends tightening of cash around the ETFs? I certainly suspect that they know that the top is probably fairly close, and they don't want a bunch of people like George Soros coming in and buying triples and pushing the market down and making a boatload of cash. But it's probably not a bad thing. I will be buying probably puts when the time comes. So I'm not really worried about it. I think that what they don't want is a lot of people, I've talked about it before, it is a lot of these ETFs are now the tail that is wagging the dog, and a great deal of it are these 2X and 3X proposals. But over the weekend, I did get a chance to read up on some of the proceedings of the SEC on this, and it certainly looks like the questions that most people are asking, that they want to get people out of 3X. And you know, when we probably get down to it, my guess is that they'll move something, they'll get a compromise, and they'll go, okay, the most we'll do is a 2X. And there'll be some kind of compromise like that. And if it works out, then in a year, maybe you get your 1.5, maybe you get it down to 1. But there's no reason that a regular citizen should have that kind of firepower. At least the SEC thinks that way. We will be back after this brief commercial timeout.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. We got some stocks that are moving on a day where I would not be surprised to see us kind of close right about here. 2093 on the S&P cash right now. 2.43 billion shares. I suspect that we probably are going into just a little bit of and back into the doldrums we had before the big announcement. Next Monday after the bell starts fund buying, not fun buying. It starts earnings season with Alcoa. We have a few coming up here. In fact, see, what do we have tonight? After the bell tonight, we've got the Container Store. This is one of the IPOs that did rather horribly, as you can see. You know, you'd really wanted this thing to probably come back down and test $4, something like that. It got to 448. I've been by their store a couple of times. It doesn't look like it's gotten a great deal better. And, you know, maybe they turn this thing around. But I always wondered the idea of selling lots of little plastic boxes at super high prices when Walmart was selling some of them for half or less than the location that I went to, at least when they first opened up. So I still have a problem with that. Tomorrow, though, what do we have? Take a look. Barracuda Networks, PepsiCo in the morning, but I don't think that's going to do anything. Barracuda could be a little bit of a mover. None of these are going to be moving the market, by the way. You had a pretty good test of the lows. I wish this thing would have gotten down and actually tested the January 20th low on the pullback. It was still 50 cents higher, and that always sets up a retest of this $9.44 low from January 20th. So I can't say that you'd want to get in front of this. This sector has been doing a little bit better, but kind of tough to figure out on that. Do we have any Friday? No. No. Monday is Alcoa, and Tuesday of next week, Fastenal, and what else do we have? That's pretty much it. That starts it normally. Next week, Alcoa kicks it off. You got 2 or 3 days without much. And then you start really looking into, let's see, Wednesday, a week from today. This is Delta Airlines in the morning, CSX after the bell, Intel also next Wednesday. So we can see Yum Brands also next Wednesday. So we got about 7 days out here. I suspect we're going to kind of mill about a little bit till we start figuring out how some of these things work out. So get ready for earnings season. It will always be exciting. I think in the most part, things will work out well. Expectations are pretty much as low as you can make them. And I don't know of a lot of the earnings that people have been moving up. They've all been moved down over the last couple of quarters. So it's not going to be one of these things where it's that hard to hit. If they miss, look out below, because expectations are fairly low. The other thing is, of course, a lot of people are looking very much forward. The pattern has been a weak first quarter and even possibly second quarter, and seeing the markets really move and the economy start to really move farther and faster in those last 2 quarters. There's a ton of money that is spent going into the election, especially in advertising and television, and that could be a bit going on out here. Anyway, not a whole lot for Barracuda. Let's go through the movers for today. American Airlines, this went right back up to its gap. And let's take another look at that here, to this gap. Yeah, I don't know if you can make a great deal. Ooh, AAL. How did I get? Oh, I'm on the wrong one. Hang on a second. Come on. There we go. American Airlines. This gap down, volume has kind of started picked up. You gap down with lots of energy on the 24th. 36 million shares on that day. Got down to 23 million shares on June 27th to 2485. I think you'd want to see this thing come down there and test with lighter volume. Of course, crude lower, and that's always got to be good for the airline business. On the downside, all the airports are blowing up. It is the end of Ramadan, so maybe it's the end of airports and other things blowing up. but I don't know. I don't think I would bet on it. Other things going on out here. Viva, kind of light volume stock. Volume is at least testing the lows out here today. I don't know if you can make a great deal out of this one. BHP, not much. A lot of these were the ones that were moving at the open I wanted to take a look at. Bud trying to test its highs. I wanted to see how this one did. It did test the April 19th high, 132.91, 3.4 million shares. Tested it on July 1st with 2.8 million shares, so it was 600,000 short on that. It's pulled back in there. It's up a little bit on volume back here, filling this gap. And of course, now that it's InBev and European altogether, seems to be a lot more gapier than it has in the past. Dow Chemical, another one, got a little hammer out here and not a lot of volume. You've got kind of like this one going in to the candle of June 28th that had 14 million shares today with 4 million shares. So, nice light volume test out here. Eagle, bulk shippers. Now, this is a penny stock, but I've always made the case if crude was going up and iron and copper and all these things were going higher, that we probably should at least see some of these bulk shippers start moving a little bit better. These things, I think we played, was it Eagle? I don't think it was. Played a handful of these one time a couple of months back and had some huge returns in a couple of days, but then we got out. Even with the Baltic Dry Index moving up, these stocks don't seem to be able to get out of the way. I continue to think maybe there's some kind of low in here, someone that buys them out, but it doesn't look like anything's gotten any better. Fiat Chrysler Automobiles, fix it again, Antonio. It's the way I learned it when I was young. Man, did they make just some of the worst cars imaginable. I remember the things being 1 year old and starting to rust out in the 70s. They had a couple of really cute cars, little convertibles and stuff, but man, they must have packed them in salt to ship them over here to the United States. Those and Triumphs. I've never seen cars so bad. Yeah, I wonder if they just flooded the car carriers on the way back over here with salt water too, because the things would just instantly rust. Anyway, when we come back, we're going to talk about movie premieres, new movies on Netflix, some other stuff going on in my life. We'll be back. Fiat Chrysler, light volume test.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we are back. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can post messages in the den. And one of the questions is, when do you speculate this market heads south again? Saying that is a tough one. I don't see it going south probably before the elections now. As many people are saying over the last couple of days, I think it's rigged. I don't, especially after last week, it's very tough for me to think that. I can't say the market's going a great deal higher. I just don't suspect that we're going to see a great deal lower. Now, that can change. I just don't see any evidence right now. In my long-term newsletter, I've got several positions. I like them. I think that we'll do well into the elections. And there's just not a lot out there to say that with world turmoil going on, that cash will not come here to the United States. We're going to need to see some kind of bottom in Europe, and I don't see that happening real soon. So I continue to think that maybe the people in Europe are getting out of the frying pan and into the fire by investing up here. But I think that could last for quite a while, 3 months, 6 months. I would not be surprised to see it last all the way through the election, and maybe even a little bit longer out there. So as long as we continue to see kind of a strong dollar, I think that is a signal that money is coming into the United States to go into our markets. And not a lot of people in a big selling mood where they just got yanked on their string last week. I don't think that a little pullback like we saw today is anything but bought. Now, could we have light volume all the way up to that high, wherever it is in the election? We could. Is it 2,200 on the S&P cash? It could be. But I'm going to have to see something other than that to figure out that as they're saying the last few days, the fix is in. What else do we have going on out here? FCX. Freeport McMoran kind of opened a little lower out here. Still suspect this thing is going to come back down to this $7 level, which is where I would like to buy it. I just think that there's a lot more weakness in the sector than people are giving credit for. That probably is going to be separate than the way that gold moves. I just don't think that copper and other non-gold pure plays are the strongest out here. Global Immune, one of the bigger losers out here today. GBIM. JP, I don't know about that one. Netflix. This thing had a nice move off the bottom. It did test the previous lows on very light volume. You had a nice move out here down to 85, 74 on 20 million shares. Tested it with 13 million shares. You've had a nice run. You had some juice. It's kind of pulling back a little bit today. I think a great deal of that was that spike on Friday that ran a lot of shorts out. It continues to be one of the most heavily shorted stocks in the QQQ. But kind of interesting. By the way, if you're looking for some good movies, Netflix has a ton of crappy ones out. But one of the things that they did quietly without any announcement is put pretty much the entire Richard Brooks movie catalog on over the weekend. And if you've not seen Defending Your Life, it is a movie that is a must-see if you love movies. And if you've got Netflix already, it's free. They put all 7 movies on already of his major movies, and all of them are worth seeing. I think he's why not a lot of people know his name, especially kids. Lost in America, Defending Your Life. At least 3 or 4 of those are movies that I would say I can watch, 8, 9 times. They're still beautiful, wonderful movies. Speaking of movies, I got to get out of here early tonight. I've got a movie premiere to attend. If anybody around Tampa knew last summer, they were filming a movie here. It is starring Bryan Cranston, and I haven't been to a movie premiere in a long time. So going out to that with my good friend, Bryan Cranston. And by good friend, I mean I've never met him before in my life. But nice big shindig here in Tampa since it was filmed here. So it'd be interesting, neat one. Albert Brooks and Meryl Streep. I'll have to think about it. I can't remember the name of that one. A lot of people. Albert Lawrence Brooks. Yep. Great movies. All free on Netflix now. Well, I guess you have to pay. But yeah, Defending My Life is my favorite movie out there. What else do we have on here? RBC. Nice little reversal out here. You kind of have to say that some of these banks have an opportunity. They're at least back in the trading range. You might make a case for a washout of the May 19th lows in RBC. It did go down there with a little bit more volume. 560,000 shares. Energy was a little bit longer. But the longer these things come back into the trading range, you could have a nice setup between this in the lows in that low 50 area to a trading range up to $60 or even higher. What else? Someone says DB puked. Yeah, it's the weakest, but you kind of have to figure that the Germans are going to be the weakest bunch without the UK financing all the weak sisters that should have never been in the EU. You have to wonder how this thing holds together. All those southern countries like Italy and Greece and the rest now would have to be funded all by DB and its associates. And I don't think you can make any kind of a case out there that that's a smart move to do, and or the current government run by their current prime minister lasts any length at all. The problems, especially in the big cities, continue to pile up. And if you're in a big city now, the huge immigration problem they have, you can't even go out at night on the streets. That is always disruptive to a government that will not defend its folks for whatever reason, cheap labor, why ever they think that they should just have hundreds of thousands of people come in is interesting. But, you came down 8.6 million shares. You really need to keep less than 10 million shares, which is that February 9th low. But I'm going to say you've kind of blown this out. Could these things, I'm kind of thinking that Deutsche Bank gets down to about $10 from looking at this and looking at the financials. So keep an eye on that. Telecom, Italia, a lot of these other stocks that just look horrible. Not a lot of volume, and of course, kind of gappy, but probably Italy's the next Greece? I'm going to say it is. We come back, we'll look at UAL, United Airlines. Also,
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
our engineer found that. That's apparently the theme music from The Infiltrator, my big Hollywood premiere movie night tonight in Tampa. 2097 on the S&P cash, 2.6 billion shares on the New York Consolidated Tape. So volume is kind of light. Like I said, I'm not expecting a great deal out of this market till we get into earnings starting on Monday, starting actually after the bell on Monday night with Alcoa, and starting to get a few into next week. We got a couple over the next couple of days, but nothing that's very exciting. Nothing that would give me a clue as to which way this market's going to break. But as I said, the bar is fairly low out here. And I don't see anything else that changes that a great deal. Probably too many shorts in this market, too. I think everybody's looking for the market to crack. And I think you're going to have some really bad earnings misses, which I don't think you're going to get, again, because everything has been moved down so low. I know the P's are rather high on a great deal of many stocks. There are many stocks that have fallen though, and probably you can make a decent case that we may just have a lot of churn out here with stocks that have come down going up and stocks that are at highs coming down, and just a giant churn fest through the end of the year. I have no index positions and no sector positions. Everything I own is a pure play in a stock. To me right now, that is a smarter idea. That may change. United Airlines out here today going up against its recent June 27th low that had 12 million shares. We've got 6 million shares. With energy coming down, if that continues to come down, you might see a nice little trade back up into this $45 range or just underneath it. There's a couple of gaps at 44. I would imagine that's where it would bounce to over the next couple of days. After the bell tonight at about 4:45, also look for the API numbers that come out before the EIA numbers for crude tomorrow. So you want to catch that. Vail, down on lighter volume. I would still like to see a retest of the 385 out here to signal a long-term low in this one. What else do we have? Whiting Petroleum, isn't that WLO? Certainly is. We'd like to see lows back on this one. It's 8 to 18 for a low out here today and a little candle. Just kind of almost touch this little tiny gap out here. I would like to see this get back to the 709 area, which is the candle of March 4th that had 75 million shares. That's probably, you kind of into it right now. That may be what you get, but I still would be a little bit more greedy on these. We've had the biggest driving weekend that we've had in, 20 years or something, with also the lowest gas price we've had over 4th of July. We might see a big drawdown on that. It may give you a little bounce out of here in the next couple of days. But again, that's probably going to see that crude market move at about 4:45 with those API numbers. Then again, tomorrow at 10:30, where you have the, I think both the numbers for crude and I think maybe at 11 you get the natural gas. I'll have to check on that. Hang on for the one and only Basil Chapman. Catch a wave with him for the next few hours, sitting in for the one and only Tom O'Brien. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.